Madison Reedy joins me in the studio for business, of all things, after that confession. Okay, so another bank has opened its books today. Which one, and what did it look like?
This was the Bank of New Zealand who reported their half year today. So their net profit after tax was actually up 12% for the 6-month period to $550 million. Their revenue was also up 9% to $1.3 billion. Now, they say that their finances were looking pretty good for the 6-month period, and that was down to increased lending for both home buyers and to businesses. Now, this is quite a different story to what I told you about the country's largest bank, ANZ, yesterday. Their finances had actually been hurt by less lending and less business borrowing. They said that a flattening in the housing market and historically low interest rates meant that there was more competition in the mortgage lending market. That obviously hasn't fared so well for ANZ, but in this case it has for BNZ. BNZ's also cut its overhead costs by a pretty significant amount, by about 9%. Its chief executive, Angela Menta, says that's because it's simplified its business, it's streamlined its products, fees and its management. And interestingly, similarly to what the ANZ said yesterday, the parent company in Australia, they mentioned the Reserve Bank's proposal to force the big banks here to increase the capital that they hold to essentially make the banking system safer in the case of, dare we say it, another global financial crisis. And BNZ did actually mention this today too. Its Australian parent, the National Australia Bank, pointed it out quite explicitly. In the result, they warned that if this goes ahead and it means that returns are not sufficient, the BNZ will need to consider repricing or reducing lending. So that's a pretty kind of stark red flashing light there directly to the Reserve Bank of New Zealand, saying that if you do go ahead with this, it'll cost us about between $4 and $5 billion, and it means that we could cut lending to your market, or we could just make it a lot more costly.
Interesting. Okay, so the country's largest fuel retailer is making less money. How can that be?
This is Z Energy. So they reported their full year financial result today. Their net profit was down 13% to $178 million from $205 million last financial year. Their underlying earnings were down 3% to $434 million. Now, this is all just simply because people are buying less fuel, and that's purely because it's just become so much more expensive of late. And because obviously we have the regional fuel tax in Auckland, but also mostly because the price of Brent crude oil has increased so much, actually 20% over the past year. So obviously people are backing away from spending more on it, given that it is so pricey at the moment.
We are rationing filling up the petrol tank. That's interesting.
It is really interesting. The chief executive of Z Energy said today that people are increasingly looking to public transport over private transport to save money on fuel, obviously. And he said that they're also looking to trade down from premium fuel, so going for the likes of your 91 rather than your 98, because that's obviously cheaper. And he said that just consumers are simply just buying less fuel. And in the first half of that financial year, Z Energy did have to increase its fuel prices 14 times in 6 months. In the second half, obviously the oil price eased back a bit, so they didn't have to increase it as much there, and there were some decreases in that period. But Mike Bennett says that not all customers returned. Now that they've changed their habits, they don't seem to be coming back to the pump as quickly as he expected.
Shall we do a quick whip around of the markets?
Yeah, go on. So the NZX Top 50 Index closed up 1.2% tonight. That's a rise of 119 points to close back over that magic 10,000 number to 10,084 points tonight. The New Zealand dollar is buying at 66.3 US cents, 94.4 to the Australian and 50.8 British pence.
Thanks, Madison Reedy, with the numbers, even though she allegedly didn't pass School C Maths.